Hey everyone, in this video I'm going to reveal my top stock to buy now in March of 2024. I'm going to reveal not only why I'm picking this stock, but also the reasons why I'm picking this stock, the fundamental aspects of this business that caused me to recommend it as a top stock to buy. So without further ado, let's jump in, let's discover what this stock is. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alphabet, Google is the top stock to buy right now in March. Now, I prefer the lower priced Google shares, GOOGL here, because the only difference is voting rights. And I think for most shareholders, the voting rights don't really matter for us unless you own enough shares to have influence over a company. I don't think the voting rights make much difference. So for that reason, I prefer you get a little bit lower price for the shares that don't have the voting rights. And to move on, Google hasn't performed well so far year to date. Now, when I recommended this stock in January, before the year started, I recommended the stock as a buy. And when I updated investors in the first month, highlighting how the company had performed, it was doing really well. It was around up here. And then the company reported earnings. That's the E you see here. After it reported earnings, the stock price has fallen. Investors did not like what they saw from Alphabet in their quarterly earnings report, and they sent the stock price down. So let's dig through those earnings and let me highlight what was good about it. And the big thing that investors, including myself, I didn't like what I saw here from Alphabet. All right, so for starters, we need to understand that Alphabet has an absolutely pristine balance sheet. It has $171 billion of current assets and $31 billion in non-marketable securities, which can be turned into cash relatively quickly, not as quickly as current assets, but relatively quickly. So about 200 billion in cash or cash-like assets. That's compared to just $13 billion in long-term debt. So an excellent balance sheet that keeps getting better because the company generates so much cash flow, and we're going to see just how much cash flow it generates every quarter and every year. So for the quarter that just ended, Alphabet's revenue increased nicely to 86.3 billion, up from 76 billion, but operating income only increased by 5.5 billion to 23.697 billion from 18.1 billion. Anytime your operating income grows less than your revenue, that's not a good sign. You want to see your operating income grow more than your revenue grows. That's essentially demonstrating a profitably growing business. For the year ended 2023, the company's revenue grew by 25 billion from 282 to 307, and similarly its operating income only increased by 10 billion. So you're seeing revenue growth in excess of operating profit growth, and that was because of the way the company handled its job cuts and cost cuts. And something you've heard me complain about with Alphabet, out of all of the tech companies that announced major job cuts, I felt that Alphabet did it in the worst way because they spent so much money on those job cuts. They gave up way too much in severance, in my opinion, to conduct those job cuts. So much so that it would have made more sense to just keep those employees rather than provide such lucrative severance packages in the layoffs. Just keep them. If you're going to give them so much money to lay them off, just keep them. And my argument was, if you needed to shrink the business, instead of paying so much in severance to do those layoffs, you could have done it better by just decreasing your count by attrition. Just let the people who find other jobs, who retire, who no longer want to be there, let them leave, let them quit, and then that way you cut your costs and you do it more effectively because you're not paying so much for the cost cuts like Alphabet did. And I mentioned I'll share with you their cash flow. You can see their net cash provided by operations. That increased from the most recent year, from 2022 to 2023, from 91.5 billion all the way up to 101.7 billion in the year. $101 billion in cash flow this company generated in 1 year. That's just a testament to how lucrative this business model is, even if Alphabet may have fumbled the cost-cutting program. But in the most recent quarter, their cash flow from operations actually decreased by $5 billion, from $23.6 billion down to $18.9 billion. But that was mainly due to the timing of these tax payments, right? You see here, they paid $9.8 billion in taxes, in cash taxes, whereas the year before they accrued a tax liability. So these tax liabilities, they accrue throughout the year. You owe the government taxes, and the timing of when you pay them will be an actual cash outflow. So the timing difference is what resulted in the big cash year-over-year decrease in the most recent quarter. So that wasn't alarming. What was alarming is this number here. Alphabet level activities of $3 billion negative, $3 billion in the most recent quarter. That was related to the job cuts, and this has been adding up all year long. Billions and billions from that cost-cutting regime, that layoff, that restructuring that Alphabet implemented throughout 2023. It cost them several billions of dollars, and $3 billion just in the latest quarter. That's a lot of money to pay for job cuts because they were giving out lucrative severance packages. Now you might say, well, that's really nice of them to do that, and on and on. But it would have been even nicer if they wanted to be nice to keep those employees and give them jobs, and let the people that want to leave, let them leave, and that way you cut your jobs anyways. But this way you're not paying so much, and you're keeping more of the people that want to be there, and you're losing more of the people that don't want to be there. But I've made that argument several times now with Alphabet stock, so I'll stop there. The good news was Google services revenue increased to $76.3 billion, up from $67.8. Google Cloud is now a profitable business for Alphabet. In just a few short years, Alphabet turned the cloud business into a profitable business now. That's going to generate several billions of dollars in profit for Alphabet in 2024 if it continues at this pace. Just in the latest quarter, it generated $864 million in operating income. That was up from a loss of $186 million. The Google Services segment is extremely profitable, nearly 33% operating income. You can see $26.7 billion in operating income on $76.3 billion in revenue. So the core of the business is extremely profitable. It allows Alphabet to invest in other categories and other areas and generate profitable segments in that way. Google Cloud being the latest segment that Alphabet has turned into a several billion-dollar business that is now going to pay dividends from here on out, or pay profits from here on out. So all that being considered, if you look back longer term, Alphabet's revenue growth has been phenomenal. 10-year revenue growth up from $70 billion up to $307 billion. Operating profit margin of 27.42%, roughly in line with where it's been for the last decade. And cash flow from operations of 33%, roughly in line with where it's been over the last decade. And all of this you're getting at a reasonably cheap valuation of 17.63 or 17.8 for the GOOG shares. So for all those reasons, I like Alphabet stock. I think their business, it has a strong competitive advantage in Google search, one of the highest market share businesses in the world. Sure, it's under threat a little bit from OpenAI and ChatGPT, but still we have yet to see that segment generate strong losses or decreases in revenue or profitability as a result of these new AI services. So I'm still keeping Alphabet stock as my top stock to buy for 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.